and Secretary, Mrs. Oluwafumilola Adekunle, ably represented by Mrs. Oroleke. The University Librarian, Professor Christopher Okiki. The Provost College of Medicine, Professor Ademola Oremosu. The Dean, Faculty of Management Sciences, Professor Sulaiman. The distinguished ladies and gentlemen of the press. It is with immense pleasure that I welcome you all to the 30th the University of Lagos in the 2024-2025 academic session. The lecture titled Risks, Ethics and the Road Less Taken, Navigating the Journey from Insurance to TAKAFUL, will be delivered by Professor Tajuddin Olalekan Yusuf of the Department of Actuarial Science and Insurance, Faculty of Management Sciences. Born on November 25, 1965, Professor Yusuf is an indigene of Abeokuta, and he holds a bachelor's degree in insurance, a master's degree in management, obtained from the prestigious University of Lagos in 1989 and 1993, respectively. In 2005, Professor Yusuf undertook another master's program in Islamic Management, Banking and Finance at Loughborough University, United Kingdom, where he distinguished himself by finishing with a distinction. He would later earn a PhD in Risk Management and Insurance from Nottingham Business School, the United Kingdom. Our inaugural lecturer, with over 26 years experience in risk management, is globally recognized as a pioneering authority in TAKAFUL, which is Islamic insurance and non-interest finance. As an accomplished academic and practitioner with an interest that traverses academia, industry, and community development, Professor Yusuf holds prestigious fellowships of the Chartered Institute of Loans and Risk Management, Nigeria, the Institute of Islamic Finance Professionals, Nigeria, alongside other notable professional memberships. He has served the University of Lagos in various capacities, such as the Deputy Director of the School of Foundation Studies and Coordinator of the Non-Interest Finance Program at the University of Lagos Business School, where he spearheads curriculum development and research in Islamic finance. Professor Yusuf's global academic footprints are impressive, flowing from his visiting professorships at institutions in Nigeria and research collaborations with universities in China, Malaysia, Indonesia, and the United Kingdom. With over 100 publications, Professor Yusuf's research on risk mitigation, insurance innovation, and the role of Islamic finance in sustainable development has earned international acclaim. His works appear in prestigious journals, including the Palgrave Macmillan series, the Crawford Journal of Economics and Management, and the Journal of Muamalat and Islamic Finance Research. Other notable contributions of his include co-editing Islamic Wealth and the SDGs, and authoring Risk Management in Islamic Finance, a Practical Approach. He has secured over 80 million naira in research grants, including TED Fund-funded projects on digital financial inclusion and SME sustainability. Beyond academia, Professor Yusuf drives industry transformation as chairman of Ethical Microfinance Bank, Macrotel Fintech Limited, and Hilal Takaful Nigeria Limited. He advises Sterling Bank, Takaful, and Islamic Finance, fostering ethical financial systems in Nigeria. His consultancy work emphasizes bridging gaps between conventional insurance and Sharia-compliant models. A passionate advocate for social equity, Professor Yusuf chairs the Zakat and Sadaqah Foundation and is on the governing board of Subtle Nursery and Primary School, promoting education and poverty alleviation. His leadership as co-imam of the UNILAG Muslim community and former chairman of the Lagos State Muslim Pilgrims Welfare Board reflects his deep commitment to community service. He is married and blessed with children. Distinguished ladies and gentlemen, it is my honor to invite Professor Tajuddin Olalekan Yusuf to present his inaugural lecture.
The Vice Chancellor, the Deputy Vice Chancellor, Academic Research, the Deputy Vice Chancellor, Development Services, the Deputy Vice Chancellor, Management Sciences, the Registrar, the Bursar, the University Librarian, the Provost College of Medicine, the Dean, Faculty of Management Sciences, Deans of other faculties, members of the University Senate, the Head, Department of Actuarial Science and Insurance, other heads of departments, distinguished academic and professional colleagues, distinguished non-teaching colleagues, administrative and technical, your Lordship, spiritual and temporal, dear students, gentlemen of the press, print and electronic media, distinguished guests, ladies and gentlemen. To Allah, the fountain of knowledge, who made it possible for me to stand before this respected audience. Vice Chancellor, the Chairman of the Senate and Chief Executive of our great university, the University of First Choice and the nation's pride, I thank you most sincerely for giving me the opportunity to achieve this landmark in my academic career. I thank you most sincerely for giving me this opportunity. You are all welcome to the 13th inaugural lecture for the academic session 2024 to 2025, the 51st from the Faculty of Management Sciences, the 4th from the Department of Actuarial Science and Insurance, and the 1st from the Insurance Unit. Madam Vice Chancellor, esteemed colleagues, distinguished guests, students, and members of the academic community, I am deeply honored to stand before you today to deliver my inaugural lecture titled Risk, Ethics, and the Road Less Taken, Navigating the Journey from Insurance to TAKAFUL. This lecture is not merely an academic discourse, but a journey through the conceptual, practical, and ethical dimensions of two significant risk management mechanisms, conventional insurance and TAKAFUL. My objective today is to elucidate their fundamental principles, ethical considerations, and practical implications, especially in an era where ethical finance is gaining prominence. Every journey begins with a decision, sometimes deliberate, sometimes decided for us. In the 1980s, here in Lagos, I was a young man at a crossroad, dreaming of accounting, but instead handed a ticket to insurance. Disappointed but determined, I stepped through the gates of the University of Lagos, unaware that this second choice would become my life's potential, my life's calling. I met Professor Nuruddin Alao, our former Vice Chancellor, who looked past my youthful frustration and saw potential. With his encouragement, I ventured into insurance, a world I barely understood. Yet, like the seeds of a baobab tree, what began with confusion grew into deep roots of passion, purpose, and a profession. Today, I invite you to walk this road with me, a road paved with risk, ethics, and the pursuit of justice, as we journey from conventional insurance to TAKAFUL. Madam Vice Chancellor, distinguished colleagues, ladies and gentlemen, the title of today's lecture is more than a poetic flourish. It is an invitation into a layered intellectual terrain. It gestures toward a paradigmatic inquiry that binds together three core elements: the nature of risk, the moral architecture of ethics, and the transformative potential of the road less taken. In this case, the shift from conventional insurance to the Islamic model of TAKAFUL. Risk in its modern financial sense refers to uncertainty, a central concept in insurance theory, actuarial science, and decision making. But risk is not a neutral construct. It is deeply embedded in how societies structure economic life, mediate vulnerability, and assign value to human security. It is here that ethics enters the equation, not as an afterthought or a regulatory add-on, but as a foundational principle. The Islamic economic system is value-laden. It orients itself toward justice, solidarity, and human dignity, karamatul insaniya. The TAKAFUL model embodies these principles through mutual cooperation, ta'awun, shared responsibility, and risk pooling, reflecting a shift from contractual risk transfer to communal risk sharing. The phrase, the road less taken, borrowed from Robert Frost's timeless poem, is both a metaphor and a methodological commitment. It signals a willingness to depart from dominant paradigms and explore alternatives grounded in religious ethics and indigenous epistemologies in a global financial architecture often governed by profit maximization and individualism. TAKAFUL represents a road rarely traveled, one that prioritizes social welfare over actuarial gain. Navigating the journey from insurance to TAKAFUL, then, is not merely a technical migration. It is an intellectual, ethical, and institutional evolution. It demands a reconfiguration of regulatory frameworks, business models, risk pricing, and consumer consciousness. It is an ongoing journey, full of promise, yet not without challenges. Ultimately, this lecture title seeks to foreground a present question: can financial systems be reimagined in service of the common good? In addressing this question, TAKAFUL is not only a product or an institution, it is a lens through which we might envision a more ethical economy, one that resonates with faith, justice, and shared human values. By contrasting conventional insurance with TAKAFUL, this lecture encourages a discourse on ethical innovation in financial services. It raises questions such as: can conventional insurance be restructured to align with ethical standards? What lessons can TAKAFUL models offer for global risk management? How can regulators create a balanced, inclusive framework for both systems? The title encapsulates the intellectual pursuit of this lecture, a critical examination of the ethical foundations, operational techniques, and future challenges of insurance models in an uncertain world. It highlights the need for ethical alignment, regulatory evolution, and strategic risk management in shaping the future of financial protection. There are several Quranic and biblical verses as shared which aptly capture the intellectual foundation of this lecture, particularly focusing on ethics in financial transactions, risk management, cooperation, and the prohibition of unethical elements like riba, interest, gharar, excessive ambiguity, and maisir, gambling. For instance, look at Quran chapter 3, verse 1 and 30, chapter 5, verse 90, chapter 5, verse 2, chapter 4, verse 71, and in the Bible, look at the book of Exodus, chapter 22, verse 25, Leviticus, chapter 25, verse 35 to 37, Deuteronomy, chapter 23, verse 19 to 20, Psalm, chapter 15 to 5, and Ezekiel, book of Ezekiel, chapter 18, verse 8, 13, and 17. Overview of Takaful. Takaful, derived from the Arabic root kafala, to guarantee, is a cooperative system where members contribute to a common fund to support one another in case of loss. The concept aligns with Islamic principles rejecting uncertainty, gharar, interest, riba, and gambling, maisir, and instead promoting mutual assistance. The principles of Takaful include risk-sharing mechanisms, mutual cooperation and shared responsibility, no interest, no uncertainty, no gambling, and there must be Sharia governance. Now, let's go into the comparative analysis between insurance and Takaful. Conceptually, conventional insurance contracts is a contract where an insurer indemnifies the insured against losses in exchange for a premium. It is a commercial arrangement based on risk transfer. Takaful, on the other way, is an Islamic cooperative system where participants contribute funds to a shared pool to provide mutual assistance in time of need, based on the principles of tabaro, donation, and mudaraba, profit sharing. When we talk about risk management approach, conventionally, insurance uses risk transfer, where policyholders shift the risk to the insurer, which takes responsibility for compensation in case of loss. But in Takaful, it uses risk sharing, where participants collectively bear risks and claims are paid from communal fund. Madam Vice Chancellor, when you also look at the conventional insurance, it's a contract where an insurer indemnifies the insured against losses in exchange for a premium. It is a commercial arrangement based on risk transfer, whereas Takaful uses risk sharing, where participants collectively bear risks and claims are paid from a communal fund. Also, one of the features of Takaful is claims and surplus distribution. Conventionally, claims paid from insurance funds, surplus goes to shareholders. But in Takaful, claims paid from the Takaful pool, surplus is shared with participants or reinvested. Now, let's look at Takaful. How does it work in real life? Take, for instance, a general Takaful, we want to insure your motor. Take, for instance, motor Takaful policy for a logistic company. A company insures 20 delivery vehicles under general Takaful. They contribute 5 million for the year. Only 1 million is used to settle minor accident claims. The Takaful fund earns halal investment returns and ends with 1.5 million surplus. What is the outcome of this? This results in a win-win solution, a win-win outcome, whereby the surplus after reserves is partly shared with participants. The logistic company may receive 300,000 in surplus distribution. The company is lower claims. The Takaful operator gains from fees and customer loyalty increases due to ethical transparency. Take, for instance, companies. This is Nur Takaful organizing a ceremony not made any claim. So if you don't make a claim, you have something to gain. This is a ceremony that was held in 2022 to show that Takaful is a win-win outcome for both participants and the insurance company. This is the performance of Ilal Takaful. Ilal Takaful distributed surpluses 2021. In the case of Ilal, The UNILAG TAKAFUL achieved remarkable surplus growth from 6.9 in 2020 to 101.3 million in 2021. The 2021 surplus reflects a nearly 1,000 year, indicating strong operational gains. All surplus distributions are backed by NICOM. Regulatory compliance. Surplus payments were formally presented in Lagos, Abuja, and other major cities, and efficient risk sharing in the TAKAFUL model. JAIS 2 is another TAKAFUL company which distributed 467 million to its participants between to show that they have made a promise to their participants, and that promise was kept through this distribution. Madam Vice Chancellor, distinguished guests, how have we got to the present state of risk management and insurance awareness? What role have our educational institutions played along this journey? The history and state of risk management and insurance education in Nigeria goes through 4 eras. The first era was pre-independence era. That was before 1960, when there was no education. Then the post-independence era. Then you have the 1980s to 1990s, which was an era of expansion and regulation. In the year 2000, you have to the present. It was an era of technological and academic advancement. And then there are many programs, programs developed by universities. And I must tell you that this was, all these organizations, these are the NICOM, National Insurance Commission, NIA, NCRIB, Institute of Loss Adjusters, the Chartered Insurance Institute of Nigeria, College of Insurance and Financial Management, and West African Insurance Institute. All of them are contributing and cooperating with educational institutions to ensure that to strengthen the professional development of insurance brokers. NCRIB plays a key role in strengthening the professional development of insurance brokers, while ELAN ensures the alignment of loss adjusting practices with industry standards. Now, I must talk about the pioneering role of the University of Lagos in the education of insurance. This is the first department, this is the first university that trained insurance practitioners. No other university started insurance education before University of Lagos. And through that, many of the leaders in the insurance profession today are alumni of this university. The Department of Actuarial Science and Insurance, which is my academic home, obtained accreditation from the Institute of Faculty of Actuaries, IFOA, for its master's program in actuarial science. It gave, this accreditation allows successful students to receive exemptions from 6 IFOA qualification exams, positioning UNILAG as the first university in West Africa and the second in Africa to attain such recognition. This achievement underscores the university's commitment to producing highly qualified actuaries to meet the growing demand in Nigeria's finance and insurance market. Also, the university, in order to ensure that its curriculum remains relevant and responsive to industry development, UNILAG Department of Actuarial Science and Insurance has undertaken comprehensive reviews. The department collaborates with key industry stakeholders, including insurance organizations and regulatory bodies, to incorporate current industry practices and trends into its academic programs. We also involve ourselves we also engage our alumni, because we have seen the alumni has also been pivotal in enhancing UNILAG's programs. For example, the 1994 graduates of the Actuarial Science and Insurance Department have advocated for stronger ties between academia and the industry. What was my own contribution in this regard? By the grace of God, I was able to develop the first full-fledged non-interest finance curriculum for a business school in Nigeria. The program, Executive Masters in Non-Interest Finance Program. That program serves as, I currently serve as the current program coordinator. integrating Islamic finance into academic and professional context. I mentored a new generation of ethical financial experts. Our products, as I speak, have been admitted for PhDs in International Islamic Universities Malaysia and INSIF in Malaysia. Madam Vice Chancellor and distinguished guests, what role has regulation played in determining how risk management and insurance are practiced for national growth and development in Nigeria? The history of insurance regulations in Nigeria passed through 4 phases. The first phase was the pre-independence era, which was unregulated market. The second was the early post-independence era, initial regulation. And then in the 1976 to 1990 was government control and indigenization. In 1990 to 2000, liberalization and growth. In 2000 to 2010, industry consolidation and reforms. And 2010 to the present, it is digital transformation and enforcement. My contribution, I joined a team of experts constituted by NICOM to review the Insurance Act of 2003. In that review, I participated in a review of the Nigerian Insurance Act as part of national policy discourse. I advocated for inclusion of ethical insurance, microinsurance and TAKAFUL in legal frameworks. I also influenced reform proposals aimed at market deepening and inclusivity. Madam Vice Chancellor, distinguished guests, despite the regulatory environment, what has been the scorecard of insurance penetration in Nigeria? The problem of abysmal insurance penetration in Africa and in Nigeria. Insurance penetration is the ratio of gross written premiums to a country's GDP, which remains alarmingly low across Africa, with Nigeria experiencing one of the lowest rates. Despite the continent's vast population, economic growth potential, and increasing risk from climate change, political instability, and health crisis, the adoption of insurance products remains minimal. Africa's insurance penetration rate is estimated at around 3% compared to the global average of 7%. With South Africa alone accounting for the majority of the continent's premiums, other African countries, including Nigeria, lag significantly behind, with penetration rates below 1%. Now, what did I do? I published 2 papers to address this problem. The first paper was Yusuf and Badamosi and Amadou. The title of that paper was to study how the attitudes of Nigerians towards insurance services. We did an empirical study, and that article was published in the year 2009. Then I also authored this second paper with other colleagues to look at socio-cultural factors affecting insurance patronage in Lagos State, an exploratory study. And that paper was also published in 2013 to address this problem. Let's look at insurance intermediaries. These are the brokers, agents, and adjusters. They play essential roles in the Nigerian insurance sector, including both conventional insurance and TAKAFUL. Given the theme of this inaugural lecture, their contributions can be analyzed from ethical and operational perspective. Insurance brokers, they are professional advisors assisting clients in selecting appropriate insurance or TAKAFUL products. Insurance agents, they represent specific insurance companies, selling policies to individuals and businesses. Loss adjusters investigate and verify insurance claims, ensuring fairness and accuracy in settlement. But they are also faced with ethical dilemma, such as mis-selling of policies, claims fraud, regulatory compliance. In a nutshell, insurance intermediaries are pivotal to the growth and trustworthiness of Nigerian insurance industry. Their roles must be guided by ethical standards, regulatory compliance, and professionalism to enhance the credibility of both conventional insurance and TAKAFUL. Strengthening ethical training and regulatory oversight can ensure a more transparent and efficient insurance system. Now, my doctoral thesis addressed this problem, and by the grace of God, I published 4 papers from my doctoral thesis addressing the problem of insurance intermediaries as a controlled opportunism in the insurance industry. What is opportunism? They are those things we regard as ethically questionable behaviors that may come from either the insurer, the insured, or the consumer. So how do insurance intermediaries correct this problem? So that with this work, I pioneered empirical work linking agency theory to Nigeria's insurance market structure, and that influenced ongoing conversations on ethical intermediation and market regulation. These are the first two papers I published out of my thesis. The role of insurance intermediaries in pre-contractual stage. Then the second one is on the post-contractual stage. How do they control opportunism of insurance customers? The third paper was on brokers' incentives to control opportunism. The last was mitigating insurance opportunism, which are widely published in top-rated journals. Madam Vice Chancellor, Nigeria, like many other developing nations, faces frequent natural and man-made disasters, including floods, desertification, epidemics, and industrial accidents. These disasters have far-reaching social and economic consequences, affecting communities, businesses, and national development. While disaster risk management and insurance are critical tools for mitigating these risks, the Nigerian government's approach has often been reactive rather than proactive. Take, for instance, oil spills in Niger Delta, the Bodo oil spills of 2008. The Bodo oil spills of 2008 highlight the inadequate risk management culture in Nigeria's petroleum industry. The government's weak regulatory oversight and the failure of oil companies to implement effective risk mitigation strategies led to extensive environmental and economic damage. Also, there was this gasoline tanker explosions in Magia town in Jigawa state. It led to an explosion that killed over 140 people. This underscores Nigeria's poor risk mitigation strategies in handling hazardous materials, the lack of public awareness campaigns on fuel transportation risk, weak enforcement of safety regulations, and inadequate emergency response systems contributed to the catastrophe. There was also this fire at Islamic school in Zamfara, which shows deficiencies in fire safety and insurance. The tragic 2025 fire at an Islamic school in Zamfara, which resulted in 17 deaths, exposed critical weaknesses in Nigeria's fire safety regulations and insurance coverage. The government's failure to enforce fire safety codes in educational institutions contributed to the disaster. Additionally, the absence of mandatory fire insurance policies for schools worsened the financial and social consequences. Also, there was this Yadis Nigeria Limited versus Great Nigerian Insurance, which was on issues on insurance enforcement. Then there was this accident, the Kobe Stingray and Jeep Cherokee accident. The 2024 accident involving a COVID Stingray and a Jeep Cherokee in Lagos revealed systemic flaws in Nigeria's insurance claim settlement process. Also, recently, there was this CBEX saga. What happened? Under a moral and possibly faith-aligned package. It promised unsustainable returns through unverified business ventures, transparency, and sound financial governance. And what happened? Speculative indicators are these: high, unrealistic returns with vague investment models, absence of risk disclosure or external audit, heavy reliance on charismatic leadership. What happened? Investors suffered colossal financial losses. They lost not less than 1.3 trillion to these fraudulent guys. What are the lessons there for ethical investors? Ethical investors must avoid speculation, masked as faith-driven opportunity. Verify before you trust. Sustainable returns come from real value, not hype. That is why regulators and stakeholders have mustered some patriotic efforts to enact some laws to make insurance compulsory to safeguard national growth and development. These are known as Compulsory Insurance Acts. Then, what has been the fate of these laws? The impact of Nigerian compulsory insurance laws on national life has been mixed, with some progress, but also notable challenges in enforcement and control. It improved access for low-income groups and vulnerable populations through subsidies, but there are limited coverage and low public awareness, slow implementation at state levels. What about construction and real estate? It provided better construction practices in some states due to mandatory insurance for buildings over 2 floors, but there is widespread non-compliance by developers and property owners. In business and employment, it increased workplace safety with compensation for work injuries, but informal sector largely ignores compliance, leaving many workers unprotected. What about road transport? Some accident victims receive compensation via third-party motor insurance, but there is rampant fake insurance certificates out there. Security and financial protection potential, but are undermined by poor enforcement, low awareness, and corruption. Now, the management and insurance of our key national assets. Madam Vice Chancellors, about 80% of Nigeria's government assets remain uninsured. Out of roughly 900 MDAs and 400 corporations, only about 25 comply with the National Insurance Act. Exposes assets to losses worth trillions of naira annually. Directed all MDAs and corporations to fully insure their assets. Insurance coverage will only be provided to MDAs with budgeted and approved premiums, and there were also sanctions. But some key sectors were affected. These are the oil and gas sector, the health sector, and the transport sector. So, the transport sector was critical but plagued by frequent accidents and poor infrastructure. So, what did I do? I contributed to this debate. I published 2 papers in this regard. One in Nigeria. I studied this to know what are the factors that marketers of insurance products will adopt in order to sell insurance to the populace, so that motors, as we work on our without any fear of accident. Also, I published a paper to investigate the effectiveness of the Nigeria National Health Insurance Scheme. What I found out from that was that the NHIS was not effective, and there was need for the scope to be widened. And this paper was published in 2015, and by the grace of God, in 2021, government has now Madam Vice Chancellor, microinsurance in Nigeria serves as a crucial financial instrument for protecting low-income individuals against unforeseen risk. Despite regulatory support, penetration remains low due to in the country. The challenges: deficit, high operational costs and sustainability, regulatory constraints, among other constraints. The challenges for this country is to take on, because there are many Nigerians who are excluded, financially excluded, and for this nation to record the. So what did I do? I published to address this problem. The first paper was Prospects of Islamic Insurance Contribution, Yusuf and Mubolaji of blessed memory, the growth development, the Nigerian experience of a case study of Al Baraka Microfinance Bank. Can really contribute to the economy. Living test. In the ever-evolving landscape of risk management, Nigeria faces unprecedented risk, includes climate change, cybersecurity threats of specialized insurance products, and so on. Social welfare, and to be supported by regulatory frameworks in countries. We have seen in other countries, like in my policy recommendations include regulatory and legal framework enhancement, strengthening of TAKAFUL specific regulations, Now, I'm also part of the University of Lagos. TAKAFUL allows surplus sharing or reduced future contributions, offering better value than conventional contributions when claims are minimal. It also aids and enhances UNILAG's leadership in to assess long-term viability and benefits. Madam Vice Chancellors, my contributions to teachings and supervised over 300 undergraduate projects, over 100 master's dissertations, and 5 doctorates, which are as the first professor of risk management and insurance. I was also on the screen. My academic contributions outside the university. I am a visiting professor of Federal University, Dutse, Jigawa State. I'm an adjunct. I'm from the second grant I received in 2020. I've published 3 papers out of it. Acceptance for these 2 papers, which we saw. TRC research grant in 2016. I won another TED Fund grant in 2021. That was 19 million. And in 2023, I won another TED Fund grant, Digital Financial Inclusion and Rural Household Wellbeing in Nigeria, 30 million. Contributions to my profession. Madam Vice Chancellor, I have contributed greatly to my profession and as listed on the screen, fellow and founding president, Institute of Islamic Finance Professionals, associate member, Chartered Insurance Nigeria, external examiner, West Africa Insurance Institute, Banjul, Gambia, Chartered Insurance Institute, London, and member, Governing Council, College of Insurance and Financial Management. Also a fellow, Chartered Institute of Loan and Risk Management of Nigeria. I pioneered TAKAFUL awareness in Nigeria. I initiated awareness in Nigeria as far back as 2003. In 2003, one of the practitioners in the industry by name Mr. Okwe Oreduba came to this campus and he was looking at lecturers who have knowledge in TAKAFUL. I was consulted, and for a whole month of Ramadan, 30 days, I was explaining to Nigerians on NTA what is TAKAFUL. And by that time, African Alliance Insurance Company was the only company that was selling TAKAFUL. And Nigerians, the profound response of Nigeria was so shaking that the NICOM, National Insurance Commission, in 2013 now released guidelines for TAKAFUL operations in Nigeria. I started 2003. 10 years later, government saw the sense in it, and they released the first guidelines on TAKAFUL in 2013. That set the stage for broader national acceptance and eventual regulatory recognition of TAKAFUL. I also designed and coordinated the non-interest finance curriculum in UNILAG Business School, Executive Masters of Non-Interest Finance. I developed this full-fledged non-interest finance curriculum, and that served as and also served as the current program coordinator, integrating Islamic finance into academic and professional context. By now, I mentored a new generation of ethical financial experts. I'm also the founding president, Institute of Islamic Finance Professionals. I established Nigeria's first professional body for Islamic finance practitioners. I spearheaded national awareness campaigns, certification, training, and policy advocacy. And the IIP has become a platform for ethical finance education and collaboration. My doctoral thesis focused on the strategic role of brokers in mitigating post-contractual opportunism. I pioneered empirical work linking agency theory to Nigeria's insurance market structure. and that influenced ongoing conversation on ethical intermediation and market regulation. By the grace of God, I was appointed by Lagos State Government in 2017 to be the Lagos State Muslim Pilgrims Welfare Board Chairman. I was appointed Chairman of the Board, guiding policy and operational frameworks for Hajj operations, taking to not less than 3,000 Lagosians to the Holy Pilgrimage in Mecca. I introduced transparency reforms and risk control measures in Pilgrim Welfare Administration, and that promoted ethical leadership and institutional accountability. I bridged academia and industry, town and gown with TAKAFUL. I organized the first academic industry engagement between UNILAG and TAKAFUL in 2023. I fostered experiential learning, career mentoring, and collaborative research that laid the foundation for regular engagement between TAKAFUL providers and academic researchers. Global recognition. I was a member Islamic Development Bank Screening Committee in 2024. I was selected to screen nominations for most impactful Islamic economies by the Islamic Development Bank based in Jeddah, Saudi Arabia. I was entrusted with evaluating global contributions to ethical and inclusive economic development, which signifies international recognition of scholarly and community impact. Like I mentioned, I reviewed the Insurance Act of 2003. Not only that, I am the chairman of Zakat and Sadaqah Foundation. Zakat and Sadaqah Foundation is a faith-based humanitarian body. And since 2016, when I became the chairman of that board, today I have raised 5 billion naira for distribution to meet the SDG goals: no poverty, good health, quality education. And I did not stop there. I extended that philanthropy to University of Lagos. Early this year, 23 University of Lagos students who were very brilliant but had financial challenges, we gave them 5 million worth of scholarship so that they can have their education. So, in closure, I have mentioned the summary of the fundamental principles and ethical concerns of conventional insurance, the Islamic alternative, the comparative analysis and regulatory, market and ethical considerations. My final thoughts. Ethics remain the cornerstone of sustainable financial solutions. The journey from conventional insurance to TAKAFUL represents an evolution towards responsible risk management. While conventional insurance has played an undeniable role in global economic stability, TAKAFUL provides a model that integrates risk sharing with ethical finance. Madam Vice Chancellor, colleagues, students, and guests, I stumbled into insurance by accident. Today, I see that accident as providence. Through insurance and through TAKAFUL, we are called to build systems that protect not just wealth, but human dignity. The road less taken, ethical risk management, is harder. It demands courage against dominant paradigms. It demands faith that finance can serve justice, not just profit. But as Robert Frost reminds us, I took the one less traveled by, and that has made all the differences. This is my story. My acknowledgement. I begin by my profound gratitude to University of Lagos for providing me with the platform to deliver this inaugural lecture. I extend my sincere appreciation to the Vice Chancellor, Professor Folashade Tolulope Ogunshola, FASOON, the Senate, and the entire university management for their leadership and unwavering support of academic excellence. My gratitude also goes to Science and Insurance for being my academic home, and to my esteemed colleagues for their camaraderie, encouragement, and shared intellectual engagements over the years. My gratitude also goes to members of my faculty and members of my department that start naming all of them. They know themselves and God knows them. I acknowledge with deep appreciation the invaluable contribution of my mentors. Mentors include Professor Kolawole Ojikutu. Is he here? A mentor indeed. I won't say more than that. Professor Ayebuda Kobe, Professor Ramon Bello, Oluwatoyin Ogundipe, and Professor Kobe of blessed memory, Professor Akingbade and the rest, Professor Ogojafo, Professor Emmanuel Oyatoyi, and my dean, Professor Sulaiman. My students, both past and present, I extend my heartfelt appreciation to mention just a few. Dr. Mrs. Adeshola Asana Okosi, who is unavoidably absent in the United States of America. She couldn't be here. Dr. Olufemi Abbas from LASU, Dr. Francis Dasu of LASU, Dr. Ashim Shogunro, University of Lagos Department. Then my professional organizations, NICOM, CIL, NCRIB, NIFIAN, ELAN, TETFON, CIFM, and very especially the IIFP. My spiritual family, I extend my heartfelt gratitude to all friends and witches and members of my professional and faith-based communities. Sheikh Abdul Fattah Thani, is he here? Sheikh Dr. Bilal Sheikh, Professor Qasim Badmosi, Sheikh Isa Akindele, Sheikh Ahmad Tuami, Sheikh Dhikrullah Shafi, Ustaz Abu Baba, the MTTMA family, TMC, Muminat, UMC, UMA, MSSN, GMP, MLA, NDMI, Smart World, and Axiosa, who have contributed in one way or another to my journey. May Allah reward you all abundantly. Especially, I must mention and appreciate Dr. Abdulhakeem Abdulateef, Honorable Yeku, and Dr. Abdul Mujib Isa for being the indefatigable companions on my Quranic memorization journey, and also their huge contributions towards the success of this inaugural lecture. Then my family, I acknowledge with deep appreciation the invaluable contributions of my mentors and senior colleagues, and my mother, who is present here today. Mami. Unfortunately, I lost my dad in 1990 when I was doing my NYSC. May Allah continue to repose his soul and admit him in Al-Jannah. That's my mother, a good mother. I can never put anybody before her. Then, I must give sincere appreciation to my siblings, Alhaja Modina Taduke Akimbode, Podami, Honorable Shamsuddin Abiodun Yusuf Olale. Is he here? That was the former chairman of LCDA. Sharafa Yusuf Olale. Fausia Amokuya Akinyemi. Moina Takunke Yusuf.
TAKAFUL. Professor Yusuf highlighted his strides in areas such as offering new models for reducing opportunism and improving fairness in insurance transactions, pioneering studies on TAKAFUL penetration in Nigeria, linking Islamic finance to financial inclusion and sustainable development, linking advocacy and public engagement, leading to the development of Nigeria's TAKAFUL regulatory framework in 2013. He also showed how he integration of Islam, how his works helped in the integration of Islamic social finance tools such as Zakat and Waqf into insurance policy design, promoting equitable financial protection, amongst others. Our inaugural lecturer did not shy away from addressing the systemic issues associated with Nigeria's disaster unpreparedness and poor enforcement of compulsory insurance laws and ethical repositioning of insurance to serve good. Professor Yusuf's work exemplifies the fusion of academic rigor and of the common good, your faculty, your faculty. Thank you very much. I thank you all for coming and wish you safe return to your various destinations. I hereby declare this assembly closed.